I'm joined today by Barry Naughton, professor and So Kwan Lok Chair of Chinese International Affairs School of Global Policy and Strategy at UC San Diego. Professor, welcome to Monetary Matters.
Thank you. It's great to be here.
How are you currently assessing the Chinese economy? You've been observing it very poignantly for many years. As we begin the new year, what are your thoughts?
I think the Chinese economy today is grappling with some of the most difficult and most entrenched problems of really any period in which I've been observing it. We see this tremendous contrast where, on the one hand, because China has put so much in terms of resources and human skills into technology and industrial upgrading, we see some very, very impressive achievements that I'm sure we'll talk about on this show, but I think most people are already aware of them. But behind that, because of the attention that policymakers have been putting on technological rivalry and artificial intelligence and moving to the frontier in a whole series of areas, they've really neglected other fundamental areas of the economy. And so you've had a long running housing bust that has not been resolved. You've got a fiscal crisis, you've got a debt crisis, and there are really reasons to worry about the long run impact of these negative factors.
So the positives are the technological breakthroughs. The negatives is the housing bust. Any other potential negatives you're focusing on?
I think the biggest negative is it's a little bit abstract. It's not something we can quantify, but it's the retreat from robust market mechanism and the lack of political will to tackle some of the economic problems that are building up. Now, that doesn't mean I'm predicting some kind of, imminent meltdown or collapse or anything like that. But I think we're starting to see a China where problems are incrementally building up that will drag on growth and drag on productive economic interchange with the rest of the world. Even when China looks strong, some of these weaknesses are building up.
So the lack of market mechanisms is very abstract. What are the pitfalls of that? Where are you seeing that?
I think there's two sides of it that we really need to emphasize. One is the increased government intervention in industry and technology policy, which has some benefits for sure, but also is increasingly distorting the market environment in which Chinese companies and entrepreneurs are operating. The second is the implications of the high levels of debt that the Chinese economy has. And now this debt is something people have been worrying about Chinese debt for certainly more than a decade, right? And so in a way, it feels, oh, it's yesterday's news. Didn't we hear about that, many times in the past? And that's true. We have been talking about China's debt for a long time. But in the process of that discussion, the Chinese have, first of all, demonstrated that they can contain any incipient financial crisis, at least so far. And they've also carried out a couple of rounds of deleveraging, right, of lowering debt. But in spite of those efforts, the aggregate debt level has continued to increase. And in some ways, it's become a more difficult problem to tackle with because it's now intertwined with these two other issues. One is the housing bust, and the other is technology policy, the urge to compete with the United States. To put a little bit of an edge on it, I guess I would say some of the situations that China is facing today approach the conditions of what we used to call Japanization, the development of the Japanese economy during the 90s, when all of a sudden it dealt with very heavy debt loads and much slower growth. Now, the Japanese economy avoided financial crisis. Right? They avoided financial crisis by essentially incrementally resolving financial distress, slowly reorganizing banks and other financial firms. And then only after about a decade, adopting quantitative easing and bringing the economy back to growth. Now, China has a lot of differences with Japan, but in many ways, it's starting to replicate some of the mistakes that Japan made. And so I think we're going to see that weighing on Chinese growth, not the same, but in a way that's sort of parallel to and similar to what happened to Japan in the 1990s.
And Professor, talking about the decline in real estate prices, so you make the comparison to Japan. In Japan during the 1980s, debt levels increased, but property prices increased so much more that on paper equity, it looked very good and for growth as well. And then suddenly when real estate prices stopped going up and they went going down, you had this huge bust. In terms of the Chinese real estate bust that has been going on for what, 3 or 4 years, I think property prices are down 20 to 25%. That is pretty close to where the levels of decline that we saw in the US market during the subprime mortgage crisis, probably from like 2006 to 2009, I might guess. So, is it a credit? Is China going through a level of real estate correction that rivals the great financial crisis in the United States? And might there be something positive to say? Is it a credit to some measure of the Chinese economy that they are not having a giant recession like we did 15 or 20 years ago?
Yes, there's definitely some truth to what you just said. But before we would say that we're in complete harmony here, we'd have to say first, I think the decline in Chinese real estate prices is certainly more than 25, 30%. Um, it is true. You're absolutely right. That's what the official figures say. But I've never met anybody in China who felt that was an accurate description of their particular market. And more generally, housing prices in Beijing and Shanghai and Shenzhen, they're down, but they're down in that range, 15 to 20%. The big problem is in the 50 or 60 other second tier, third tier cities, and they're still big cities where the overwhelming majority of the real estate is. And there we're talking about 40% or more decline. So it's a big impact on people's aggregate household saving. Because remember, as I'm sure, but just to remind our listeners, for Chinese households, real estate has been a much more important asset in their portfolios. They hold fewer stocks, almost no bonds. What's more important is bank deposits and real estate. And so that if we call it a 30, 35% overall decline in the value of your by far biggest asset, that's a pretty substantial hit.
If the hit, might be even bigger than the on paper hit in China and rivals that of the great financial crisis in the US, why is GDP, 5% and, not a negative number like it was for the US? Is it because they're exporting so much?
The proximate answer is that as real estate investment declined, China ramped up its investment in high-tech manufacturing. It's almost a dollar for dollar shift when you look at the credit balances in particular. Less for housing, more for industry. So in the short term, that did exactly as you predicted. It prevented the GDP growth from falling below approximately 5% per year. But imagine the flip side of that. All of that investment going to industry in a way that wasn't driven by market forces, but rather driven by government policy mandates, means that industrial capacity has increased very rapidly, so that virtually every sector has overcapacity, has intense competition, and falling prices. Consumer prices are essentially flat, but very slight deflationary. But industrial prices have been in out and out deflation for 3 years now. So prices are falling, profit margins are falling. There's a lot of distress in the system. And the Chinese call it involution, right? And the Chinese government launched a campaign middle of last year against involution. Nobody really thinks it's fundamental enough to reverse these different forces. So in other words, the shift to industrial policy kept GDP growing, but entrenched the macroeconomic problems even more severely.
In economics, mainstream economics hold that deflation is generally a bad thing. Tell us why that is the case. And does the head of China, Xi Jinping, does he agree with mainstream Western economics that deflation is generally bad?
Let's start with the second part, because that's easy to answer. No, Xi Jinping famously does not agree with Western economists that deflation is a bad thing. In fact, he's very famously quoted as having said in a meeting with his advisors, he said, wait, if prices are low, isn't that a good thing? And of course, many people feel the same way. China is inexpensive, especially at today's exchange rate. You go to China, you will feel, wow, things are really inexpensive, not just, manufactured goods, but everything. You can get a good meal in Beijing for a fraction of what it costs in San Diego, for example. So not everybody agrees, but I think we can adopt the economic standpoint and say it is a bad thing. It's a bad thing for a whole number of reasons. Let me just take two. One is this tremendous market pressure is driving this enormous trade surplus that China is developing. As I'm sure your listeners will have heard, by November, China had $1 trillion trade surplus. That's enormous. And of course, one of the peculiar things is the trade surplus with the United States is not increasing, it's decreasing. So China's surplus with everybody else in the world is just massive. And that's a huge obstacle to world economic growth. And it's, of course, for China strategically, it creates problems. They want to say, oh, we're a BRIC country, we're allied with Brazil. But Brazil is saying, well, thank you. We have a kind of populist left-wing government. We want to be friendly with China, but we also have our own industry to worry about, and we're being deindustrialized because of the impact of these Chinese exports. So that's certainly one set of problems. The other set of problems is that interest rates have to come down, nominal interest rates have to come down in order to try and stimulate growth, right? If we're in this deflationary environment. And so China's in a very low interest rate environment, which means the banking system isn't able to make very much money from the interest rate margin between its loans and its deposits. So the profitability of the banks has gone down, which means the ability of the banks to clear up bad debt on their own has decreased. So the stress in the financial system tending to Japanization that I talked about earlier is in part the result of this deflationary environment that makes it harder to clean up bad balance sheets.
So the cause of the deflation, a near term, I guess maybe cyclical force, is the negative wealth effect of real estate prices going down so much. So consumers, their on paper net worth has gone down. What might the other forces be of Chinese deflation? And do you see an end in sight?
So the other forces would be these sort of very important but relatively longer term structural forces. China, of course, was a growth superstar for 35 years, right? And after about 2010, the growth rate started to come down significantly for reasons that were inevitable. In the essentially the countryside emptied out of underemployed workers, especially underemployed younger workers. So the flood of young men and women into coastal factories to make garments and toys finally came to an end after 30 years. So that was going to happen anyway. It so happens that this then went along with demographic changes where the size of families dropped even more than people expected. Labor force started declining in size by 2021. It's dropped every year since that time. That's already happening, but it's going to accelerate from now on. So there are these very powerful long run structural forces that are also at play. And therefore, as a result, when you look at Chinese household psychology, There's been a tremendous shift. This is one of the most striking things when people, including myself, returned to China after COVID. There was this remarkable shift in how ordinary people were talking about the economy. They would start to say things like, we're not taking a vacation on this long weekend because of the economy. In the same way that we started in the US to say that in the 80s and 90s. And this was such a reversal because for so many years, because China had been growing so fast, people, even when they were poor, were always optimistic about the future. Right? You had this built-in stabilizer, which was the willingness of households to believe that things were going to get better anytime there was a shock. And all of a sudden, that disappeared. So I would say you've got these sort of three things: long-run structural change, but housing bust, and then reinforced by this change in household psychology. That makes it a very different kind of overall macro environment. Now, I'm not saying these things couldn't be changed. They could be affected by a very astute, targeted, intelligent policymaking. But we're not getting that because policymakers led by Xi Jinping are obsessed with this technological competition with the United States.
If Beijing wanted to end deflation and improve the consumer domestic economy in China, and they were listening to economic advisors such as yourself or other folks, what might you advise them to do? Question one. Question two, I think you hinted at the answer is no. Does Beijing want to do that?
Yeah. So the question two is easy. They don't. So they're not ready to listen to people like me. And there are plenty of excellent economists in China who are saying similar things. I'm not saying everybody thinks the same thing, but there are many very good economists who have advice. And I think the thing to start with is it's not going to be easy, right? Housing downturns are really debilitating. They really take a lot of time and effort to overcome. But we can easily imagine a kind of 3 or 4 component set of policies that would have a beneficial effect. First, you almost certainly have to set up some kind of new housing bank or bailout fund or a well-funded resolution institution. And we did it in this country in the 80s, right after the local savings and loans had so many difficulties. We set up the resolution trust, right? China needs something like that. So that would be number one. Number two would be some kind of aggressive, visible effort to resolve the real estate firms that are technically bankrupt. This has been going on now for more than 5 years, actually, if you go back to Evergrande in 2020. Firms break down, they're not recapitalized, they get cannibalized. The system drips funding into it to keep things going, but nothing ever gets clearly resolved, and therefore people's expectations can't find a ground and they can't turn around. I think there's a lot of tension between the Chinese government and different private companies in China today because of the very high priority that the government gives to technological competition, but also to ideological orthodoxy. Private firms feel as if the Chinese government is not their ally in the way that it was 20 years ago. And a few simple political demonstrative acts that say, no, we actually really value these private firms, which after all are still the most technologically innovative, dynamic firms, that could make a huge difference. And then I think the fourth thing would be to tackle local government finances, because local governments used to depend on real estate transactions for a lot of their revenue. Now that's evaporated, and yet they're still under all this pressure to spend for all these different things, including high-tech industrial parks and various demonstration projects of different times. So if the government demonstrated some will to help local governments resolve their finances on a fundamental level, that would also make a huge difference. So none of these things are easy, right? They all require political commitment and a certain willingness to bear some risks. But I think absolutely, if you started to do things on a multiple dimension frame, then people would pretty quickly realize that the economic conditions have changed and that there's going to be more opportunity again in the future.
So, first and third recommendation, that the first was fix the bad debts in the system, particularly with real estate and housing. The third was with local governments' finances, which is somewhat related to the first one. I'm sorry, I didn't write it down. What was the second one?
So the second one was resolving the corporate finance of these real estate companies, which have unsustainable balance sheets. So really, the first one was a setting up a new government institution that is going to inject money into the system. On the one hand, it would be a confidence building exercise and targeted toward the real estate sector. But on another level, it would simply be a Keynesian stimulus, right? You just pump money into the system in order to prop up aggregate demand. But in particular, the aggregate demand is coming from the consumption side. That's what we really want to see and that we haven't seen in the past several years.
Would you also include consumer stimulus, not to increase consumption?
So, consumer stimulus is what we need. I'm a firm believer in the view, and I think you had Michael Pettis on this program not too long ago, and I'm very much in his camp that the Chinese economy needs a restructuring in which aggregate demand shifts significantly towards households and towards consumption demand. So I think that's the underlying thing that we need. The Chinese government thinks that too. And in fact, in the most recent 5-year plan, of course, 5-year plans are still very important in China, they actually, for the first time ever, put a phrase in there that says the share of consumption in GDP should increase. Now, if they meant it, that would be a dramatic breakthrough, right? Because if the share of consumption is going to increase, then something else has to decrease, right? The share of investment has to decrease. The share of the trade surplus has to decrease, or so some combination of those two, because those are the only three elements there are in GDP demand side, right? So that would be very dramatic. But the amazing thing is that in the final document, this commitment is put in a subordinate clause of one long sentence that includes improving the efficiency of investment and doing that. Oh, and by the way, raising the share of consumption in GDP. So it's the credibility of it as a policy objective is really undermined because it's clear within when you read the whole thing, it's clear what the number one priority is. The number one priority stated in many different terms is build the high-tech manufacturing future and beat the United States at artificial intelligence and other types of future industries. So that might be the right thing to do on some philosophical plane, depending upon what benefits AI does bring us. But at least in terms of the short-run economy, it's definitely not the right policy.
You referenced the 5-year plan that was just out. Can you talk about the intentions and publicly announced goals of Beijing and when they're announced? So I know there's the National People's Congress in March, and then in October or September, October, there's also something important. There was a lecture that you gave in India a year or a year and a half ago, and you had this great little table showing how in 2023, the number one priority was expanding domestic demand. But then in 2024, that got downgraded from number one priority to number three priority. And you just said that in the 5-year plan, it appears optically like it has a high importance, but it's subordinate to all these various things. Just how seriously are you taking this announced Chinese goal of supporting and expanding domestic demand, specifically not just in absolute terms, but as a share of GDP? And then these publicly announced goals on the spectrum of this is actually what the government wants versus this is PR. Where are these kind of goals aligned?
I think the government policymakers, led by Xi Jinping, honestly want to improve consumption standards for Chinese people. I think it's part of the China dream. And they can also see that GDP growth, which constantly threatens to be below their target and possibly is below their target, depending upon exactly what numbers you believe, they understand that more robust consumption demand is a crucial part of that. So I think they're genuinely in favor of this idea. The problem is that they're not willing to make the sacrifices in other areas that would really be needed in order to make this happen, which might include lowering investment first, which of course would immediately mean your GDP growth would stall out, right? You might have a year of zero growth, but that might be what's necessary to establish a credible policy orientation that signals to households and especially to private business that this is a new reality and they have new opportunities. Instead, every time they reach one of these crunch points, they end up doubling down on their technology and industry policy. So, for instance, in November, so just 2 months ago, not even 2 months ago, the state council issued a big document on application scenarios, which means, and they have a whole list of them, sectors, I think, which means areas where government actors and state-owned enterprises should create final use cases for new technologies like AI, for instance. In other words, it's not enough that we just subsidize the production of these things. We should also be creating structured demand situations so that we can begin to bring, certain new technologies and new manufactured products into new markets that we're essentially creating for them. Now, that's not necessarily a bad idea, right? It makes sense. And in some ways, it's more consistent with our own much narrower idea about how industrial policy should function, right? For government to create a market and then let private businesses respond. It's not a bad idea, and it may be good. But at the same time, it also shows where their attention is. Right? Are they going, you could imagine Chinese policymakers looking at 2025 and saying, it was a good year for us. The Americans challenged us and we stood firm and we didn't make concessions and we hit back with our control of supply chains, which we built up over the years. And we forced President Trump to back down. And now we're in a kind of detente. Now, you could follow that and say, therefore, maybe we can ease off a little bit on these very intensive mobilization of resources. Maybe we could ease off a little bit and really release resources to the Chinese people. But they haven't done it. Quite the opposite. What they've done is to say, aha, you see, this shows we were right all along and we should do more of it. And so this sort of new application scenarios, and who knows if it ends up really being important or not. But what it shows is this intention to add another layer to industry and technology policy. They're already working hard on the research part, on the engineering, on the commercialization. This is another slice that says in order to make commercialization of new technologies successful, the government's got to step in and structure these scenarios, they call them. It's a funny word because in English, scenario means something that, hasn't happened, right? But this is, indeed, it hasn't happened yet, but the idea is to make it something very concrete, real, and practical that will take this step toward commercialization and make it more feasible.
A former chief economist for the IMF, Ken Rogoff, he in an interview told me that in the year 2000 or 2001, he sat down with the then Chinese leader and told him that the Chinese economy was incredibly imbalanced and that there was a lack of demand, internal demand, and that it was exporting the difference, and that this is a big problem. And the Chinese leader appeared to understand and agree. Is China ever going to do something about this, or is there China, allegedly, claims to think in very long term things. In 2060 or 2080, what does China have their consumption as a share of GDP, or are they still going to be having 2%, 3%, or extremely high current account surpluses as far as the eye can see?
Bringing up the leadership is exactly right. And I'm sure Ken Rogoff spoke to the leader in 2000, 2001. Those leaders were very different from the current leader. They have different priorities and different ways of viewing the world. So I think it's very hard to predict. Right now, the current leadership, as I said, they can claim victory in 2025, right? At least in terms of the economic contest with the United States. At least they have a plausible story for their people, right? That says, hey, there was conflict, we were prepared, and we stood them down. So I think that short run probably contributes to his popularity and the stability of his government. On the other hand, there are a lot of people who are saying, that's nice, but what about me? What about my family? What about my children's future? And they would say, of course, quietly and privately, I don't feel that the future outlook for my children is getting better. I think it's getting worse because there's intense labor market competition as well. And our deflation is a human feature as well, where there's not enough jobs for skilled people, and it's compressing wages and causing all kinds of problems. Will those pressures be enough to really drive a shift in economic policy direction? We just can't say, because it has to get channeled through the political system, and the political system concentrates a lot of power at the top. If they don't want to listen to ordinary people, they don't have to listen.
What did you make of the 2025 showdown, if we can call it, between the US and China? Let's start in April when President Trump raised tariffs on China to above 100% for a handful of days. And then there were a lot of extensions. And then I believe it was in November that President Trump met with China's Xi. What are the lessons? Yeah, give us your summary. What are the lessons? And how are you thinking about US China trade relations in the new year, 2026?
So again, starting at the end, it seems that short term, both sides have decided to get along. So I don't see any immediate storm clouds, but it's also clear that both sides have decided to get along because both have calculated, hey, we need more time to get ready. The United States feels like it needs more time to get ready in terms of critical minerals, and China feels like it needs more time to pursue its technology policies, and in particular to achieve some kind of real semiconductor self-reliance, which it definitely doesn't have today, in spite of the progress that they've made over the last couple of years. So I think we're in this short-term stabilization, which is basically a good thing. In terms of the earlier stage, in terms of the sort of summer crisis, really the astonishing thing is that the U.S. administration didn't foresee the Chinese response. It's very peculiar. We have known about Chinese domination of supply chains, especially for rare earths, for 10 years. And it's true that the domination has become more focused and more critical to our economy because rare earth magnets have been playing an increasingly important role during those 10 years. But the basic threat has been there, and we did reopen rare earth mines in the United States, in California. And so some domestic production has been started, but we're just still moving so slowly and so far behind. But policymakers apparently weren't aware of this, and they just fell right into it.
So it primarily was that rare earth export ban that caused the US to come to the table and lower tariffs?
Yes, absolutely. I think it's fair to say that was 80% of it, and the other 20% was probably the realization that there were still several other critical minerals that China could target next that would also have a big impact. So there was not a obvious bargaining ladder short of making substantial concessions, which we did.
You write how China didn't really have an industrial policy until 2006. Before then, it really was just privatizing the economy and deregulating stuff, and that led to a lot of growth. But that you have a very specific definition of industrial policy that is the government actually attempting to change the composition of the economy, the weightings of the sectors
Yeah.
between different sectors, between investment and consumption. Trace the beginning of China's industrial policy. Why did it begin? And do you think that we are in a new crescendo of industrial policy and that this sort of Chinese meddling, to not to make it a judgmental or a negative word, but Chinese interference in the economy, the government interference in the economy is only going to increase going forward?
Thanks for those great questions, and thanks for reading my work. I appreciate it very much. Um, yeah, and I want to stress that I'm not saying that's the only definition that makes sense. I just think for a productive discussion, it's good to have a very clear discussion, a very clear definition, and that's the one that I think is most useful in that sense. And of course, for China, it's a little muddied because Chinese local governments have always been these very entrepreneurial, revenue driven, employment driven. I think there was a great article in the Financial Times in December, I think, about the growth of production of foie gras and cherries and caviar in China. And all of these were stimulated by local governments, which were looking for high value added products for their poor farmers to start producing. So is that industrial policy? Of course, you can call it industrial policy if you want, and that's fine. But it was really the response of entrepreneurial government looking for something that made money. As you said, it didn't envision changing the structure of the economy. But then in 2006, as this period of very rapid growth is starting to come to an end, Chinese policymakers for the first time start to say, oh, we should shift our production into higher technology industries that have a more favorable chance of growing. And so that's when what later come to be called strategic emerging industries start to be targeted. So that's what I take as the beginning of Chinese industrial policy. And then it gets ramped up after the global financial crisis. They want to spend money to stimulate the economy. So why not spend it on strategic emerging industries? And then it expands because China in 2016, formally, a couple of years before that actually, decides, hey, we've got to go all in on this technological revolution. Green, ubiquitous, smart technologies. And if we don't ride this wave, we're going to be followers forever. So it expands into this, let's push ourselves to the frontier. And then in 2020, it adds a whole nother layer, says, oh, we have to be self-reliant. We have to be self-sufficient. So we're going to start to de-risk. They hate that word. They claim they don't have a de-risking policy, but of course they do. And they claim we're going to make sure that our high-tech sector is not dependent on the outside world, which of course means not dependent on the United States. So that's the background for why they felt they were in a relatively strong bargaining position in 2025, because they had already begun to make these preparations in different kinds of industries, different kinds of supply chains to fortify their economy. I see no indication whatsoever that they're stepping back from that now. If anything, you listen to David Sachs, President Trump's advisor on AI, and he essentially says, look, everything is in the competition to have the most capable AI stack, and it's all about who gets to general intelligence first. Maybe the Chinese believe the same thing, and that they need to foster the competitiveness of their full stack of AI participants in order to if not, sort of compete for world dominance, at least be able to protect themselves from an emerging era of U.S. AI dominance. So that's the driver, and they are not taking their foot off the gas pedal.
Tell us about how innovation and technology how the capital is allocated to that within China, how that differs from the US. Many of our listeners are familiar with venture capital, bank financing, the capital markets, bonds, equity issuance, IPOs. Okay. But within China, how is it different?
Great question. The simple answer would be just the government role is so much bigger. Obviously, government role has stepped up at Biden and Trump too in the US, but still it's tiny compared to the big tech giants, which really deploy extraordinary amounts of capital. China overall, even with the government, deploys less capital total, but government influence is much bigger. State, all the big banks are state owned. And so bank credit is the biggest source of investment. They also have an institution called government guidance funds, which are essentially their effort to replicate something like a venture capital fund, but seeded with government money. They've had a mixed record, to put it mildly, but certainly it's been big enough to channel substantial amounts of money. It has not fully offset the retreat of American venture capital from China, which has happened over the last 5 years, which has caused their overall venture capital scene to contract rather dramatically, actually. And then I guess the one last thing to add there is they have recently been rather successful with having some of the startup funds, especially related to AI chips and other things in that area, having these firms do their initial public offerings. And they've been well managed, oversubscribed, and get a nice pop when they're first listed. Now, a cynic would say, sure, you can list a company and let the world know that the government supports it and it's a favorite of the government. And so, of course, you should invest in it for the short term. It's going to go up for the short term, but that doesn't really show that it's going to necessarily be successful from in the medium and long term.
So we'll link to your work on government guidance funds. When you look at the most important companies within China, Alibaba, Tencent, maybe NetEase, BYD, and I'll also include not publicly traded, but DeepSeek, which was spun out of a hedge fund. How many of the giant tech firms or the most important companies are actually funded by these government guidance funds? And then also, yeah, what is going with DeepSeek? There's a hedge fund in China that was so successful that they're now developing this technology that could be better than OpenAI and Google. What's going on?
So we see this tremendous disjunction, right? On the one hand, Chinese government's pouring money into all these high-tech sectors. And there are some great successes, but most of those great successes really are driven by very individual entrepreneurs who have their own vision and are willing to overcome all kinds of obstacles and don't necessarily just benefit from Chinese industrial policy. It's actually reasonable. I think this goes beyond our knowledge, but it's actually reasonable to assert that China would have come this far technologically on the basis of the effort made by Chinese households and private businesses. Because it's Chinese households who are investing in education. It's Chinese households who are sending their kids to the United States and to Europe and Australia and Japan to get advanced degrees. And it's Chinese businesses that have made many of these most important breakthroughs. And that's certainly true of Alibaba. It's certainly true of DeepSeek, which is led by, as you said, a guy who set up a hedge fund, a quant fund, made a bunch of money, and decided that he could use that expertise to train a large language model. Now, there's a lot we don't know about the total resources he used for this training process. He certainly used NVIDIA chips that were purchased before some of the restrictions were put in place. but he seems to have done it far more economically than any of our models. Of course, for our models, since they're fundamentally not economically constrained, the optimal strategy is to pour money into it. And he was economically constrained, so he had to find other ways to do it. But it's a very, very impressive achievement, but also quite idiosyncratic. The one thing you can say, you have to give Chinese government credit for expanding the education of people in artificial intelligence. And most of the engineers at DeepSeek who actually created these solutions were trained in China, in particular at Zhejiang University, not far from Shanghai, where they built a very strong AI department. It's a complex picture, but you definitely don't want to give all the credit to the Chinese government.
And when you assess the US versus China in the AI race, many people dispute that it is a race, a competition to the very end. But let's just accept as a premise that it is. How do you assess the various advantages and disadvantages for each side?
The way I simplify it for myself is that the US still has a substantial lead in large language models and in the kind of core guts of artificial intelligence processes, but it's not a very long one. We're talking about somewhere between 6 months and 2 years, which is maybe a long time in the AI world, but for most other things, pretty darn short. And China has a lot more experience in the AI real world interface. So Chinese robots and Chinese industrial automation, and even I saw a story. Now we have to be a little bit skeptical about all these stories about a solar powered AI driven tree planting device in China that you could set up and it would plant a tree and then walk 10 feet and plant another tree, and et cetera. Now, maybe it's just for show, but I think it does show very genuinely that China has this enormous manufacturing base, and they are not just subsidizing AI and robots, but they're also subsidizing the purchase and the application of these things. And as a result, they've learned a lot about how to integrate AI applications in the real world. And that's an area where, as I mentioned earlier, now they're accelerating that kind of buy side support to create and test new scenarios where high tech is being actually implemented into real world situations. I think that's an area where, my amateur assessment is US is still lagging in that. We see AI everywhere, but we don't see it making our physical life more convenient much yet. I'm sure we will soon, but there's a lag there.
And if you look at a lot of US technology and software and intellectual property, I think a lot, billions and billions of dollars of revenue and profit flows every year to US companies just to license that technology. Every country in the world is licensing Microsoft software. Every so many countries in the world are licensing Visa or MasterCard fees are very dominant around the world. China is an exception to that. India, I think, is also an exception to that. But that is true of so many industries. I might say finance as well. You could say they're licensing dollar technology. We have all of these advantages. I imagine the current administration and definitely the CEOs of the AI companies envision or yearn for a future that is similar in that regard. So in 2040, an Indonesian firm is using OpenAI or Google large language models or some other American country's models, and they're paying a fee. So maybe in the future, 2040, America still has a very chronic trade deficit, but it will have a service surplus because of these advanced technologies, and all the revenue is flowing back to Rome, so to speak. Does China want to avoid that world? Does China want its models to be dominant? And is it really? Can you speak to the scale of the China's demand to maybe replace the US as the leader of the world, not even speaking militarily or anything. That's a different story. But just of in 2040, he wants a Nigerian tech firm to be licensing Chinese software, not US.
Yeah, certainly that is the case. I mean, and as you know well, most of these Chinese models are open source models, which is, of course, some people are very strongly in favor of open source as a technological model. But for me as an economist, just thinking about it as a business model, this is also a way that you facilitate adoption, low cost adoption of your model because people can customize it more easily. It's in a way a kind of price competition, right? That they're able to get this product in front of a customer who's maybe not prepared to pay full price for an enterprise model from Anthropic or OpenAI. So absolutely, they see this as a part of economic competition, and they want to at least compete head to head with American tech giants for these ultimate revenues if they pan out. And of course, I'm not qualified to be a grand strategist, but I can certainly tell you that Chinese leaders very much believe in strategic rivalry, and they're trying to figure out what the Trump administration's policies about the Western Hemisphere, about Venezuela, mean for China and Taiwan. Is the U.S. retreating to the Western Hemisphere, or is this something different? They're staying up late at night trying to work out those questions and the implications for themselves. But they are fully committed to broad spectrum competition with the United States, no question about it. Or when I say they, I guess we should say the Xi Jinping administration is committed to this kind of broad spectrum competition with the United States.
And so throughout this interview, you've reiterated your view that you don't see it very likely at all that the Chinese government is going to step back and let markets allocate capital rather than the government. I think you've indicated that you think overall that over the past 19 years since 2006 or 20 years has not been good. What when the chickens come home to roost, what does that look like? Or because it's government run economy, you never really see the chickens coming home to roost. It's nothing bad happens. It's just that the damage is hidden.
That's what I think is most likely. We economists are very bad at predicting bubbles bursting and discontinuous change and things like that. And in China, you've got a population that's now predominantly urban. It's now predominantly middle class. It's not predominantly upper middle class, but these are people whose grandparents suffered scarcity, and now they live relatively stable middle class lives. So I think there's a lot of people think of China as being potentially unstable, but I think actually there's a lot of social stability built into the system because people's lives have been transformed over decades. Now, I think they're not particularly happy with, the way policy is right now, but it would take a lot more, a lot worse to really drive them to extreme, extreme situations. China is basically a successful country. At the same time, people aren't satisfied with what they have. It's not a rich country. They want more, and they want more for their children. So I think these tensions are building, and it's a question of whether the political system will decide, oh, yes, we can take steps to meet people's legitimate demands for a better life, which is, after all, what we claim to want anyway.
And when you look at China's trade surplus, how did it change in 2025 in reaction to the US tariffs? I think the US China trade surplus went down, but that's only the bilateral numbers. If you look at everything, the US total trade account and the China total trade account, I don't know if there were that many changes. Can you give us your sense of the rough sense of the numbers? And is it still China's goal to be an export powerhouse? Will that not change in the next 5, 10 years?
It's definitely is China's goal, stated repeatedly, not only to be an export powerhouse, but to be an export powerhouse in sort of all sectors. In other words, they've specifically said, just because we're so committed to the high tech industrial pursuit, that doesn't mean we're going to abandon traditional industrial sectors like garments. Instead, we want to revolutionize those sectors by making them shifting to robots, shifting to intelligent factories. And they've got some very impressive dark factories that are just staffed by a few technicians working 24 hours a day through automated processes. So they're still committed to that. They do understand that the size of the imbalance is too big, but they're not taking the steps to reduce it. So what's happened to trade flows is the U.S. has reduced, in relative terms, the imports it takes from China. But China's exports have continued to grow through sort of two channels. One is channels through third countries, of which the two most striking are Vietnam and Mexico, where sometimes it's just trade diversion and misinvoicing, but more often it's China producing components or partially assembled things, depending upon what they are, and then adding a layer of processing so that the final goods declaration comes from Vietnam and Mexico. So that accounts for a very good share. Different analyses differ about how big the share. Probably a third of the reduction in direct imports from China is actually channeling through third countries. And then the big effect is increased Chinese exports everywhere else. And that's the thing that is really not sustainable, because these countries are looking carefully at ways to protect their industry and prevent another China shock like the one that affected the U.S. in the mid-2000s.
And what happens if every country is trying to improve their external accounts at the same time? Do you think we ever could have a Smoot-Hawley Great Depression scenario? I know that was a lot caused by the gold standard, but it appears that the economy in 2025 defied many of the very bearish recessionista, inflationista prognostications from economists, particularly in the US. Is it too early to say that those prognostications were wrong, given that trade is a slow moving fact force?
It seems to me, just as an individual, not trying to speak authoritatively as the economists think, but just me as an individual, that there are very large risk factors in the global economy. The U.S. fiscal deficit is very big, especially for a country at or close to full employment. And the debt level is increasing. U.S. is trying to reduce imports, and in November seemed to be successful. So who knows? But absolutely, there is all this contention where you have unsustainable levels of borrowing and debt in certain quarters, perhaps including the United States, plus a situation where more and more countries are trying to bring manufacturing back home, whether it's for military purposes like Germany or for completely unrelated purposes, just for development. So I think there are these profound risks and tensions built into the whole global economy. And it's just really difficult to predict what kind of a trigger it would be. Right now, everybody's very optimistic that we're going to get through everything. And that's nice, but you can't help but noticing the submerged reefs that could some kind of very serious challenge.
And many economists absolutely loathe tariffs, and it's probably their least favorite thing. I'd say there's a near consensus. I think you have a slightly different view. Is that fair to say?
It's a little bit true, but I guess for the U.S., since the U.S. doesn't have a value-added tax, and every other country has a value-added tax, which it basically rebates to exporters on some level. If the U.S. had a low but relatively uniform, I don't think that would be terribly distortionary. It's not first best, but we obviously don't live in a first best world. That would not be a terrible thing. But we've got this crazy tariff structure right now that makes no sense whatsoever. So it's both inequitable and inefficient. It doesn't really contribute to solving our economic problem.
By inequitable, you mean that a tariff is very similar to a consumption tax, and consumption tax are regressive, meaning a billionaire pays a 5% consumption tax, and someone making minimum wage or just doesn't have a job at all also pays a 5% consumption tax.
That's for sure. And then plus on top of that, the variation in tariff rates across countries is great. India faces a very high tariff rate. Why? It makes absolutely no sense. So if you're going to use tariffs as a sort of geopolitical tool, which President Trump has repeatedly said he likes that, he wants to do that, but it inevitably means you're going to give up something in terms of economic efficiency because you're targeting a different objective altogether.
Do you think that the Chinese government would ever look favorably upon a strong stock market culture in the same way that we have in the US? Perhaps some people would say in the US that we have too strong of a stock market culture. But the supposedly quote unquote communist Chinese government party was very okay with there being a giant home and real estate bubble and real estate culture. What's different about a stock market culture? I guess it is owning a share of businesses and being entitled to their profits and via dividends and the like. So I guess it is a little bit different. But in 10, 20 years, could the Chinese market look similar to the US equity markets or maybe other advanced economies?
I would say for China, never say never. Could that happen? Absolutely. It could happen. What are the odds? Wow, it's so difficult to say. I think it's probably a minority, probability less than 50%, but not zero. I think there's a kind of a latent opposition to the repoliticization of the economy. There are a lot of people who are well educated, some of them are also wealthy, who really want China to be more of a market economy, a more relaxed economy, and not so much more democratic. I think the the roots of a sort of democratic opposition in China are unfortunately relatively weak, but a more market friendly opposition, that's not weak at all. There are lots of people in China who feel that way, including lots of people who are bureaucrats in the system who have been burned by Xi Jinping's anti-corruption campaign and endless austerity campaigns within the government. Lots of people don't like that. So how would this change? The problem is we don't have enough inside information to be able to piece it together a scenario of how it would change. But is it possible? Certainly, absolutely. You could easily imagine a scenario of lesser strategic tension and a more open and market-friendly China. But to predict that based on what we see right now would be irresponsible. But it's certainly possible.
And so Xi Jinping has been the leader of China for 14 years. I don't know if their term limits are still in effect. Is it your base case, and is it the base case of most people who are informed on this issue that he is going to be leading China for the rest of his life?
People have different base cases for sure. To me, the question is, will he serve another term? And then if he serves another term, then I think that would be his last one. But another term would mean being reelected in 2027, and serving through 2032. That's a long time.
It's no secret that Chinese demographics are turning very downwards and that the fertility rate, the births per woman, is way below the replacement rate. Actually, I just did an interview on this subject, so I have the figure in my head that I believe the UN forecasted, and again, forecast, who knows, but that by 2080, there will be more senior citizens over the age of 65 in China than there will be adults between the ages of 15 and 65. So obviously a radically much more gray-haired society than we have in China now. In the same way, right now it's much more gray-haired than it was 40 years ago. Just what does that look like economically, and what are the what problems might result from that, and how could those potential problems be avoided?
Yeah. It's a really difficult question, I think, for two reasons. One is what China is going through is the same as what countries around the world are going through. So whatever China is doing. This is also what's happening in Japan and Korea and Italy and many other countries. But in China, it's happening faster, or at least as fast as the fastest, which is I think basically Korea,
Yeah.
and at a lower level of average income. It might turn out not to be as difficult as we think if people live healthier lives longer and work longer. We'll see. There's a lot of gloom and doom, which might be completely right, but it might not be as bad as people fear. But China's got to at least do a couple of things, which so far it hasn't. It's got to reform its pension system and put it on a sound basis, which it has not done, even though people have been talking about it for 10 years. And it's just been bleeding subsidies from the main government budget into the pension fund to keep the provincial pension fund solvent. That's obvious. That can't last. You've got to resolve just the mechanics of the pension system. And then beyond that, you have to figure out a way to channel these new technologies into a way that makes life better and easier for people who are 65 and over, or more importantly, 80 and over, because they're going to be increasing very rapidly from now on.
As working age share of the population declines, which is somewhat inevitable as the population ages, is a necessary consequence of that, the decline in working age share, that basically debt as a percentage of GDP has to go higher because the government needs to be borrowing and slash printing more money to fund Social Security or the other countries' equivalents of Social Security?
That's an interesting calculation, which I haven't made. Obviously, if you step up your saving while the demographic bulge still works to your advantage, then you have that advantage of a stock of savings that you can draw down during the period of maximum demographic crunch. So that could be helpful. China does have it still has more saving than debt by a large margin, right? So that is something that can be drawn on. And also Chinese seniors, because they started off life in such difficult economic conditions, still have pretty modest expectations, and they're willing to, I think, live pretty frugal lives. So those two things which give us, I think will help ameliorate the short run difficulties. But yeah, long run, just the transfer from actual income generating workers to dependents becomes really challenging if you really do get to a state where you have one retiree per one employed person. Boy, that's going to be a tough one.
And we've talked about real estate through the course of this conversation. I gave the official number 25-30% decline in prices. You said the decline experienced by often folks on the ground in China, particularly not tier one cities, is often a much greater decline, as high as 40 or maybe even 50%. It's possible to predict the bottoming of Chinese real estate, but at some point, prices do have to stop going down, I imagine. Is it on the Chinese government's plan to halt fall in prices?
Yes. And there was actually a very interesting article that just came out this month in the sort of top theoretical journal of the party, that it's one of these articles where if you read it really critically, what it says is, oh, everything we've been doing doesn't work. But if you read it in a more favorable terms, might indicate that the government is prepared to really shift and give more support to housing as a long run growth component. In other words, accepting that it's never going to be what it was before, but trying to stabilize it, and which I think only makes sense if they have a conviction that it's near the bottom, which it certainly wasn't in 2015. One of the things about 2015 that was worrisome to economists was that the real estate prices took a significant dip again, especially in the second half of the year. They're certainly thinking about this. They're certainly worrying about it. And they seem to be trying to put a floor on things by saying, okay, now for a middle income country like ours, where people are upgrading their living condition, we don't have to necessarily house a bunch of new workers anymore, but still people want to improve their living conditions. So what does that look like? And trying to use that to drive a stabilization scenario. And of course, stabilization would make a huge difference. Once people decide that price declines are over, then their behavior is going to change and it will change dramatically.
What are you working on right now in terms of a new essay or paper on China, or a book?
I am trying to work on a short new book on industrial policy, maybe called China Industrial Policy 3.0, because I think we're there now. And of course, always looking back and trying to understand and narrate what's happened so far, because I think for so many years, people like me were just watching China with the sort of tension. Are they going to reform? Are they going to open? Are they going to move forward? And of course, they did up to a certain point. And so now looking back and understanding that process and why it changed is also super important for academics.
And okay, sorry, I'm trying to go through your book. You have a table from your book, which was published in 2019 or 2020, Industrial Policy in China, or that was published in 2021, excuse me. But you have Industrial Policy 1.0, Industrial Policy 2.0. I thought, I'm maybe misremembering, that Industrial Policy 2.0 was the electrical vehicles and AI plus and all this stuff. So what would 3.0 be?
So 3.0 would be the the things that happen after 2021, where self-sufficiency becomes crucial and clearly drives Xi Jinping's thinking that we need to be self-sufficient so we can be an independent strategic force, not dependent economically on the United States. And then as they do that, they start coming up with new kinds of instruments. And those instruments are specifically designed to get the government back in the business of organizing the research and the engineering and the management and the market and putting all these steps of the innovation chain together and making it work, which I think is in some ways it's very insightful. It shows their deep commitment to this, but it also means a really worrying increase in government involvement in so many different steps of the economy. And I think the jury is still out, right? Whether this really is going to transform China into a high-tech superpower or whether it's going to intensify the problems pushing other parts of the economy towards stagnation are a huge question. And of course, it's one on which our immediate future depends to a significant degree.
Final question, Professor. In your work, you've emphasized the phrase modernization of the industrial system, which the Chinese government points out. And as you've written, that sounds like a very vanilla, bland phrase, when at least when it translated into English. But what is the significance of this phrase, modernization of the industrial system? It sounds so normal. If you hadn't pointed and highlighted it with a red Sharpie, I definitely would have gone way over my head. Why is that? What's the significance of that?
So, thanks for that question. And thanks for reading this stuff so carefully. I really appreciate it. It's a classic example of the Chinese using this sort of bland, vague language. And in this case, what it means is, oh, we've been paying attention and we understand that a high-tech manufacturing base is not just a bunch of key factories that make chips, say. It's also high-tech services. It's also industrial design services. You have nimble, small companies that provide production side services. And we want to support all of these domestically as well. So, I mean, in a sense, it's even more ambitious because it's saying we should replicate within China all the different components of the whole global high-tech system, which of course means, well, we're going to have our own ASML. Yes, sure, that's a hardware producer, but it means we're also going to have our own, chip design companies. We're going to have our own Qualcomm. We're going to have our own Broadcom, et cetera, et cetera. So it's a conception that's really broad. It's funny because the name that I mentioned earlier of sort of application scenarios, that's also really bland and slightly abstract, right? But then when you probe into it, you realize, no, this is actually a very concrete program to do certain specific things. It doesn't mean it necessarily work, right? Because even these concrete programs have to contend with the complexity of China's bureaucracy and misaligned incentives and all kinds of things. But the biggest mistake we could make would be to treat these kind of bland, abstract things as only being kind of wishful thinking. They're not. They're real programs. Whether they succeed or not, that's something we need to monitor. But they really show the commitment of Chinese policymakers to this effort.
That's interesting. Professor, thank you so much for being so generous with your time and insights. We'll leave it there. We'll link to some of your work. Thank you, everyone, for listening. Please leave a rating and review for Monetary Matters on Apple Podcasts, Spotify, and also subscribe to the Monetary Matters Network YouTube channel.
Thank you.
Thank you. Just close the door.